Right then, good afternoon, folks, and just another update from us at a slightly early end to the week. Certainly here in the UK, obviously we've got Easter weekend, got Good Friday tomorrow, bank holiday across the UK, and then obviously Easter Monday, again a bank holiday across the UK and most of the countries within the G10 space. So a little bit earlier this week in terms of a video, but still a little bit to go through before we get into non-farm payrolls tomorrow. So we'll start of the week. Really a picture of US data this week. We'll come back to look at the manufacturing PMI out of the US on Monday, which is the lowest reading since May of 2020, back in COVID. So obviously the manufacturing sector, the purchasing managers within that industry, not too confident about the manufacturing sector going forward. Brings us into then the job openings figures on Tuesday, and again below consensus 10.4 million. The consensus, we came in roughly about 500,000 job openings less than that. We come in then to the non-manufacturing PMI on Wednesday out of the US. 54.5 is the consensus, actual 51.2. We then come into jobless claims figures, which is a medium impact figure on this calendar, but was up 230,000 versus a consensus of 200. So a raft of weak economic data throughout the US on each day over the course of this week. We'll get back to the charts in a little bit, and we'll have a quick look at that as well. Obviously, apart from that, other things to note: RBA on Tuesday decided to hold rates steady as expected. Again, they're going to remain data dependent going forward, and for now seems the end of interest rate hikes. But if inflation continues to be persistent, they also measure also the jobs market remains strong in Australia, and they will have to monitor each of those things going forward. Mainly inflation. They got a bit of wiggle room in terms of the employment situation throughout the country, but the interest rates will be decided by incoming economic data, mainly inflation. We'll have to see how inflation, albeit a quarterly figure, over in Australia. But for now, they seem to be holding rates firm at 3.6, which is not as high as some other countries. So maybe they do not experience some of the effects that other countries may have with interest rates being above 5%. Again, same picture when it comes to the RBNZ, which we did have an unexpected 50 basis point hike. We were expecting a 25 basis point from 4.75 up to 5%. Actually came in 5.25%, so slightly higher than anticipated. Rate hike, and they are also then going to remain data dependent going forward. Again, inflation still remains sticky in that country, and the jobs market remains above a sustainable level. So they will need a few more to become unemployed. They need inflation to come down, but they want to see how their interest rate hikes to date will take effect over the coming months. So again, not fully clear cut done in either of those countries, but seems to be for now they will go on a slight pause, aligning with the Bank of Canada, and that is those three countries data dependent going forward, and potential for the end of rate hikes across those countries. Which brings us on to then tomorrow. When we got NFP tomorrow. Now we'll just have a look across the charts and we'll just see what we're looking at. Obviously, now we see Australia, we see New Zealand with their commentary along with their rate hikes have put a bit of downside pressure across the two currencies. Slightly dovish commentary to go with their rate hikes, or with the rate hike in New Zealand. Sorry, obviously the Australian dollar holding firm is probably likely to remain negative for each of those currencies, certainly in the short term over the next couple of weeks. But you can see across the euro dollar, across cable, and you can see the upside across Monday and then Tuesday, pretty aggressive upside when it comes to euro dollar. Same thing again when it comes to cable, pretty aggressive upside across Monday morning, and then Tuesday as well. Have had slight pullbacks, as have the rest of the currencies. You see weakness over the course of the week, certainly Monday and Tuesday. When it comes to dollar Swiss across here, weakness across dollar yen Monday and Tuesday, weakness across dollar CAD, certainly over the course of Monday, somewhat stabilized across Tuesday and really just chopped sideways. So ongoing dollar weakness, kind of pretty much across the board over the course of Monday and Tuesday, and Aussie and Kiwi decided to turn around a little bit earlier than the rest of them, but still dollar weakness, dollar selling over the course of this week off the back of a raft of negative data points, which further point towards a potential recession in the US. We'll come across the equities. All right, equities, slight bit of downside across the week, certainly across US indices. You look at the S&P, you look at the Dow, the Nasdaq, and the Russell, all moving lower over the course of this week. Nikkei smashing lower over in Japan. But FTSE having a bit of upside this morning, and the DAX really largely flat over the course of the week. But the main focus this week again is these US markets. Now, you come across the bond yields in the US, you can see the 10-year and the 2-year falling quite aggressively over the course of this week. Now, that is negative for the dollar, but in the past kind of a number of over the past number of months, weakness in bond yields have shown a relaxation of interest rates, which have been largely supportive for equities over the last while, but a little bit different over the course of this week. Equities somewhat under pressure off the back of bond yields falling, but bond yields falling off the expectation for interest rates to not be as high in the future off the back of negative data. Now, why these things are moving, if it's just a general move lower in bond yields over the last couple of months, it's been supportive of US indices, but with those bond yields moving lower off the back of increasingly weakening US economic data, that suggests trouble for the economy going forward and a potential recession in the economy going forward. So that then in turn causes a bit of downside in equities, not material downside, not massive downside, certainly across the S&P, but Russell was smashing lower on Tuesday, along with the Nasdaq smashing lower yesterday. But into today's end session, since US Open a couple of hours ago, or an hour and a half ago now at this point, a slight bit of downside across US indices. So is that likely to persist into tomorrow? Remains to be seen. But bond yields down, US dollar down, and also US equities down with it, suggests trouble ahead for the US economy. That brings us into non-farm payrolls tomorrow, which a consensus of 240,000, as you can see here. Consensus for the unemployment rate not the budge, but all kind of leading indicators for these figures do point towards a weakening print. You've had weak economic data across the board. Do we see a bit of a reaction tomorrow? Do we see a bit of negativity surrounding then the jobs market, with unemployment claims being high this week, with the job openings pushing lower than this week? Does that suggest some pain ahead into tomorrow with US markets? If I was a betting man, obviously I am, but if somebody put a gun to my head and said choose which direction you think NFP goes tomorrow, you'd have to imagine weakness, wouldn't it? You'd have to imagine weakness in the unemployment sector, or in the employment sector, sorry, which then should prove further negative for certainly the US dollar, further negative for bond yields. What then that means for US indices is a little bit trickier to read into. But with the price action over the course of this week, you'd have to imagine downside across all three of those assets would be upside in bonds, downside in yields, but downside across all of those three different methods of looking at charts. So that's really it over the course of this week. Apart from the oil situation, we've had stabilization across oil over the course of this week. You can see, just largely just chopping sideways, not pushing back lower to fill any of this gap up that we had on Monday morning, off the back of OPEC reducing supply of oil by 1 million barrels per day. And you'd have to imagine that likely proves supportive for oil going forward. Hasn't got going, or that trade hasn't materialized just yet since the open on Monday, but that is probably where you'd be looking at on oil. Reduced supply of any asset, regardless of what it is, reduced supply of an asset should then push the price higher as supply tightens, and that's what OPEC have done. So we'll have to see then how that plays out going forward. But you've had some banks, saw Goldman Sachs calling for oil to 100, have other banks, other institutions calling for oil up above 90. So with supply being reduced, you'd have to imagine probably some downside, some upside across the price of oil going forward. But NFP tomorrow, the main one to watch. Likely to expect some weakness out of that. I think it's an easier trade if it is weakness than it is strength, but that's probably what markets will be anticipating. So we'll wait for that patiently to come out tomorrow at 1:30. Obviously, it's a bank holiday in the UK, so do be careful with low levels of liquidity around the release tomorrow. If you do get low levels of liquidity, you could be susceptible to some wild swings in price. So if we're trying to make some profit off it, a wild swing in price is not the worst thing. So keep an eye on that into tomorrow, 1:30 tomorrow. unemployment rate and non-farm payrolls. We'll see how that plays out. If we are expecting a recession out of the US, we will need unemployment to rise further than it currently is. But it's gone from 3.4 to 3.6 in the last month. Can we get it up past 3.8? I say can we as if I'm hoping for it, but in terms of some trading opportunities, that's probably what you would hope for. But anyways, I'm going to wrap it up there then, folks. Obviously, Good Friday tomorrow, Easter Monday. On Monday, if you are celebrating, enjoy your weekend. Certainly a long weekend for us here in the UK, so make the most of it. Do enjoy a couple of days extra break. But of course, tomorrow we will be keeping our eyes peeled on non-farm payrolls. But yeah, have a nice weekend, and I'll speak to you all again next week.